Once more, 2025 was a very difficult year for Tesla, and on multiple times. The company's stock price hit all-time highs. For Tesla investors who had high hopes for the company, at the start of the year, this was particularly challenging. This time, investors are looking for indications that the stock value will increase this year. Fortunately for Tesla investors, there is a trigger that has the potential to increase the stock value by 10 times in a single day. This is one you really don't want to miss. Tesla recently set a record for electric automakers with the unveiling of its turning point for the last quarter of 2025. The business posted Q for earnings of about $1.19 per share and revenue of about $24.3 billion. In the 3 months ending in 2025, Tesla's automotive revenue was approximately $21.3 billion, which included approximately $324 million in deferred income from the company's driver assistance systems. Tesla intends to set a far higher goal for this year, with the goal of delivering around 1.8 million vehicles by 2023, according to the manufacturer. This is a growth rate of about 40% when compared to 2022, in order to stay on course for their long-term objective. Tesla also said that it plans to increase production as rapidly as possible in accordance with its 50% compound annual growth rate. What implications does this have for Tesla? Let's investigate. However, before we do, please remember to like, subscribe, and enable notifications if you enjoy this type of content, so that you can keep informed about all things Tesla. Car sales are steadily skyrocketing, and the corporation may reach yet another significant milestone with this new goal. 1.8 million deliveries for Tesla this year would be a significant year-over-year gain. According to Tesla bull Dave Lee, the fact that Tesla is so close to accomplishing this is exciting. Tesla delivered 405,000 to 178 automobiles in Q4 of 2022, bringing its yearly total to over 1.6 million vehicles. Based on Tesla's production and delivery rates from the previous year, this provides a fairly plausible estimate of about 1.8 million vehicles. As the business increases production at its factories, these figures are anticipated to rise in the upcoming quarters. Musk claims that Tesla may produce up to 2 million cars, although he has cut this estimate a little in case things don't work out. Speaking about demand, the CEO of Tesla said that the company received more orders in January than it has ever had in its history. Orders have occasionally greatly outpaced production. Musk continued, in 2023, Tesla might produce more than 2 million cars if this production rate is maintained all year long. The demand for Tesla automobiles is undeniably high and is predicted to continue rising in the upcoming quarters, particularly in light of significant global production ramp-ups. Tesla is anticipated to fulfill this demand as well. Tesla will continue to grow and generate more income if overall production and demand rates stay high. This could raise the price of the company's stock. It's crucial to remember that this is only one of several triggers that have affected Tesla's stock this year. Renowned Tesla investor Cathie Wood believes that the company will see enormous profits in the coming years. She estimates that the stock of Tesla will nearly double in value over the next 5 years due to electric vehicles alone. It's more like a 12-fold increase over the next 5 years, she continued. For people who support driverless vehicles, she is still optimistic about Tesla and believes that its stock might reach 12 times its current price, or about $1,699. Naturally, Tesla needs to do a lot to get to this price, particularly following a terrible year for tech stocks during which many investors lost interest in buying the dip. Rising interest rates that have put pressure on growth stocks worry that demand will decline in the case of a recession, and fears that Musk's purchase of Twitter will divert his attention and force him to sell additional Tesla stock in order to keep the social media business afloat have all contributed to the sell-off. The Fed raised its benchmark federal funds rate by 4.25 percentage points last year to fight excessive inflation, the steepest rate hike since the mid-1980s, which had a significant negative impact on growth stocks like Tesla. Additionally, Fed policymakers predicted that rates may peak between 5 and 5.25%. Musk's sales of Tesla stock and the upheaval brought on by the Twitter takeover made Tesla one of the index's largest drags. Senior analyst at Swiss quote bank Ipikaz Kardeskaya said, "It seems like the trust in Tesla is gone and the automaker's dream has suddenly ended." She went on to say that investors are now more interested in how Tesla will be impacted by the impending recession, how rival EV manufacturers will affect its market share, and when Musk's actions on Twitter will no longer negatively impact Tesla. Recent official data and company surveys have shown a more severe decline in manufacturing activity, and the Fed raised rates several times last year. The goal of the central bank's rate hikes is to decrease inflation by decreasing demand, and there is proof that this is precisely what is occurring in the corporate sector. There are indications, though, that the Fed may decide to raise interest rates more modestly as officials become more assured that the economy is reacting to its attempts to lower inflation. In light of rising confidence that inflation will continue to drop this year, U.S. central bank officials are reportedly getting ready to pause the pace of rate rises and debate how much higher to raise them, according to Fed members' recent interviews and public remarks. Reducing the rate hike pace to a more conventional quarter-point increase would allow them more time to evaluate the effects of earlier raises before determining where to halt. Additionally, Fed Vice Chair Lael Brainerd stated that the Fed can better absorb more data and likely reach a sufficiently restrictive level by increasing rates in smaller increments. The most devoted individual investors in Tesla are undaunted by these difficult times. They still have faith in the stock, which was one of Wall Street's largest gains during the pandemic. Despite the dangers associated with demand and Musk's Twitter diversions, retail investors are still purchasing more Tesla stock despite the company's continuous share price decrease, most likely as a result of its aggressive annual projections. Furthermore, worries regarding a purported decline in Tesla's demand could not be justified. Recent reports suggest that Tesla's alleged demand issue may really work to its benefit. The business is using its excess output to hold onto market share, and rivals are more vulnerable to its recent price reductions and well-stocked inventory than Tesla is. Tesla is currently facing the opposite issue from its competitors, and Musk is trying to take advantage of this. The business may maintain substantial profits while lowering the cost of cars, according to reports. Tesla is using the challenge as an opportunity to adjust to somewhat reduced demand. With savings of up to 20% off initial costs, the business has lowered the prices of its best-selling cars in China, Europe, and the United States. This might cost Tesla up to almost $7 billion in profits this year in the U.S. alone. However, experts claim that this is a long-term plan to maintain Tesla's position as the leading EV vendor. Tesla may have to forego short-term earnings in order to gain market share, but this decision should pay off handsomely in the long run. From about 80% of the EV market in 2020 to about 65% last year, the company's market share has decreased recently, so this aggressive price-cutting strategy might be just what Tesla needs to reclaim its leading position. Leo Kogwin, the third-largest financial backer of Tesla, mentioned a robo-taxi profit model in a recent tweet. He said that by selling the car to private owners for about $100, zero with FSD, and charging $20 to $40 every ride, Tesla could make its own tiny robo-taxi with a profit of about $200,000. Kogwin thinks investors will gain a lot if they can accomplish this. Kogwin asserts that he is extremely optimistic about Tesla's future and predicts that the company's market capitalization will surpass that of both Apple and Saudi Aramco put together. Musk said the same thing following the release of Tesla's Q3 2020 financial results. Musk stated on a recent earnings call that he thinks Tesla can overtake Apple. In terms of market capitalization, he believes that in the future, Tesla will be worth more than the tech business, around twice as much as Saudi Aramco, even if he is aware that this will not be simple or occur anytime soon.